Okay, Freunde, bevor das Video wirklich richtig losgeht, wollte ich euch das Ganze hier einmal nur zeigen. Und zwar geht es in diesem Video einmal um dieses Phoenix-System. Das Ganze hier geht um ein Liquidity-System, worüber wir per Yield Farming bzw. Per Yield Staking so gesehen Geld verdienen können mit extrem hohen ja, Renditen, die quasi jährlich ausgegeben werden. Ich konnte jetzt die Chance nutzen und eben einmal einen Mitglied des Teams zu interviewen. Das ganze Interview folgt natürlich im Anschluss zu diesem kurzen Vorspann. Wichtig für dich, schau gerne mal in die Videobeschreibung, dort findest du alle wichtigen Links und Informationen. Dann würde ich sagen, viel Spaß mit dem Video. Okay, Freunde, dann starten wir jetzt direkt mal mit dem Interview. Wir haben jetzt hier exklusiv jemanden aus dem Team, der uns Frage und Antwort stehen wird.
Phoenix is a new yield product, and we launched it around 1.5 months ago. And now we're looking to basically scale it across the crypto space.
Okay, yeah, nice to meet you. So then let's start with the first question. What makes it different from other yield platforms?
So basically, one of the main things where Phoenix really stands out in liquidity farming or liquidity mining is the fact that the yield that's generated is generated from a truly transparent and reliable source of revenue. And this
Yeah,
basically is, if you look at all the DEXs that are currently being used by traders to buy and sell Ethereum or other top blockchain digital assets, most of the trade is happening on Uniswap and 1inch and some of these exchanges. If you become a liquidity provider there, you can also do that yourself manually. You will earn a fee for providing liquidity.
yeah.
But it's a complex process, and we basically dumb it down for the average crypto trader who has no clue about markets and fundamental analysis and impermanent loss, and we allow them to make money at a touch of a button. This doesn't exist out there with other yield programs. There are staking programs, but usually the staking is done and you're earning in a token. You're not actually earning in
Yeah,
USDC.
true, yeah.
So that's a big difference.
Okay, nice. So, but where does the yield comes from?
Okay, so if right now you want to sell Ethereum, okay, you have to buy the Ethereum from another trader. Either you can do this on a centralized exchange like Coinbase or Kraken or Binance or something, or you can go to a DEX and you can find liquidity there and basically give the other trader your USDC and get your ETH,
Mhm.
or vice versa. All of this is done now by smart contracts, automated. And for the person that is providing the liquidity, that is providing the USDC or ETH, there's a small fee usually, and
Yeah.
they earn that fee. So this is what Phoenix is basically doing with your capital. It puts it on the liquidity curve, and you become a liquidity provider, a mini liquidity provider, if you will, and you earn your fees that way.
Okay, yeah, nice. So why should an investor use Phoenix and yeah, what's the benefit of using Phoenix?
I think the very important thing here is transparency of returns, so that
Hmm?
it's
Yeah.
truly verifiable revenues. If you look at all the staking programs that didn't do so well, but you remember they were very popular in the US as well. I won't mention any names, but all the popular staking programs that were offering 5, 10, 15, 20% yield,
Yeah.
they all collapsed because what the management teams were doing with that money was they were prop trading it. They were speculatively trading it. They were putting it into other yield enhancement programs. And when the
Hmm. Yeah.
markets fell, they were not able to pay out that yield. And a lot of these companies went bankrupt. So why they should use us is because we don't take your capital. Your capital is simply parked using smart contracts, and you're passively earning yield as people are buying and selling Ethereum and Bitcoin.
Okay, great. But are there any risk if an investor uses Phoenix itself?
Yes, there are risks. So there's no risks on the platform or the software level. For example, just last week we were approved by Apple, so they've gone through the app, gone through the malware process. They've made sure it has no malware, so the app is very safe. We're
Hmm.
launching
Yeah.
a web version soon as well. But your risk as a liquidity provider on Phoenix is basically to the underlying price of the crypto. So the liquidity is being provided in Bitcoin and Ethereum and top digital assets, really the top five only, including USDC as well. Now, the price of these assets will fluctuate, not for USDC, but for Ethereum, for example. But because of the way Phoenix sets up liquidity for you, if the price of Bitcoin, for example, drops by 5%, yes, you won't have a 5% drop in your capital. Your drop in your capital will be 1% or 2%. So it's negative leverage. It's not geared directly to the prices, but that's the risk. Now, if the price of Bitcoin goes back up or Ethereum, then your losses will normalize. You won't have those losses anymore. And this concept is known as impermanent loss. You may have come across that as well before if you've done farming. But this is basically your risk or exposure. And while the prices are moving of these cryptos, the more they move, the more volatility there is in the market, the better it is for you because the yields go up. You earn more fees. So volatility is actually good. What is bad is if you enter Phoenix and the price of Ethereum, Bitcoin, they enter a permanent bear market. So it just goes down for 1 or 2, 3 years. It keeps going down. That's very unlikely. But in that period, then yes, you will have losses. You will make money on the yield, but on the capital side, you could take losses.
Yeah. So on the website, there's a minimum deposit of $1,000. Is there any reason for this, or?
Yeah, so it's a very good question. So firstly, the good news is within, I think, 4 weeks, 2 to 4 weeks, we're dropping that minimum down to $100 to really allow more users from around the world to access this. The reason we started with the $1,000 was basically the way the smart contracts have been structured, the way our system is set up. If you're depositing less than 1,000 from the gas fee standpoint, because in order to interact with the smart contracts, there are some gas fees, it would not be economical. But we found a way now. So in a few weeks' time, you can get in with a much smaller amount, and you can also test the system out for a few months before you like it, before contributing more.
Okay, yeah, that's really nice. So what are the near and long-term plans for Phoenix?
So at the very short term, of course, is to drop the deposit amount from 1,000 to 100.
Yeah.
Then we want to launch the web-based version because not everyone is comfortable with downloading a Mac or PC app.
Yeah, true.
The web, and also mobile version. Get that out there. And then, of course, very important for us is the affiliate program. The affiliate program allows you, for example, to refer a friend and earn for life as long as they're in the program. They are basically getting a cut of the fees that we would earn, but it's going to you as the introducer, and it just continues that way. The revenues are all real, but basically it allows the system to get more users into the system. So that's really important for us. And then we want to add more types of liquidity programs. Right now, we only have 3. We have a very low risk version, which is targeting returns of 7% per year, but that's very, very low risk. And then we have a medium risk, which is around 12%. And then we have what we call the high risk, the high return one, which is 20 to 30% per year. And we want to add more.
So do you have any plans for growing the user base?
Yeah, so for us, one of the biggest plans, of course, is the affiliate program, because we believe what we're seeing right now is we have people from around the world coming in, not from the US because it's close to the US, but people coming in. They sign up, they start with a small amount to see how it goes for a few weeks, for maybe 1 or 2, 3 weeks. Then usually we see a top up, and then because they see the returns coming in every minute and they're able to withdraw their capital, they're able to withdraw also their earned fees. There's no lockups or anything. That creates trust in the user, and then they tell their family, they tell their friends. So we're seeing basically people bringing in that. So we want to work on that kind of an organic route. We'll, of course, be doing some advertising as well in crypto and also outside of crypto.
Okay, nice. You mentioned already the affiliate program. How does it work? Does the user have a link, or how do I refer friends?
Yes, exactly. So the user will have a unique link that you, for example, could share to your community. You could share to anybody. And then when the new user joining either clicks on your link, or they get inside the app and they give your code, because there's a place, then basically the system will know, okay, this is Lucas's user, and then Lucas will be able to monitor his earnings for life, basically per user, to see how much has been generated, and then you can withdraw your earnings in USDC, and later we're going to add some fiat on-ramp, so you can withdraw it also in fiat.
Okay, and I saw you have also a software as a service partner program for like bigger companies.
Yes.
How does this work?
Basically, you have larger companies or projects that have dormant capital. They want to earn money with that capital. Yes, they can, of course, put it in the bank. They can earn 3-4%. With the inflation today, interest rates are not low anymore. So you can do some of that. They can put it into real estate. They can put it into quite a few things. But they can also, if they want to participate in the global flow, the decentralized flow of currencies being traded in crypto, and they want to earn double-digit yields, so much
Yeah.
above inflation, with relatively reduced risk, then we offer them tailored solutions for people, so institutional level solutions as well. So it's the same thing we're offering users, but for businesses.
Okay,
Let me give
nice.
you an example. I can give you an example. We
Yeah.
partnered with a community in Singapore.
Mhm.
It's a blockchain community called Jetstar, and they have around 20-30,000 users on the gaming side. But as a project, they have investable reserves that they want to yield. And so we've created a white label version for them, which
Oh,
accepts
okay,
their
yeah.
token. And if you have their token, you stake their token in the software, and you can then use the software and earn yield as well.
Okay, nice. And a lot of my community members are loving passive income. And are
Yes.
you going to add like a auto compounding function or?
Yes, it's a very good question. We get this question all the time. We have to add auto compounding. Right now, the reason we don't have auto compounding is
Mhm.
because a lot of the deposits are relatively small. The average deposit size is 5 to 6,000, and most people
Mhm.
are on the higher risk program. They're looking to earn 20-30% a year. But in absolute terms, that maybe comes to maybe 1,000 a year.
Yeah.
That's over 12 months. So each
Mhm.
day, if we put auto compounding on to take your earned fees and put them back into the liquidity pool, has to go through 3 steps,
Yeah.
two of which are smart contracts. So we have to pay gas fees for that. So the problem is it becomes uneconomical for auto compounding at small levels. We're looking at Arbitrum for that because Arbitrum is,
Mhm.
almost free in terms of gas fees. But we have some solutions on that front. We definitely want to add auto compounding, but we see how we do that.
Okay, nice. I think that was a great overview about the project.
Thank you.
Dann danke euch, dass ihr mit dabei wart. Und wie gesagt, alle wichtigen Links und Informationen für euch unten in der Videobeschreibung. Auch der Link zum Projekt natürlich auch für euch. Dann würde ich sagen, bis zum nächsten Mal.